Hello everyone and welcome back. In this video, I will discuss ISA 505 external confirmations, which is a very important standard under audit evidence. In the previous lecture on ISA 500, we learned that auditors must obtain sufficient appropriate audit evidence. Now, one of the most reliable ways to obtain such evidence is through external confirmations. Therefore, ISA 505 focuses specifically on how auditors use confirmations from independent third parties. First of all, let me define external confirmations. An external confirmation is audit evidence obtained as a direct written response from a third party to the auditor. In other words, instead of relying only on management's records, the auditor seeks independent verification. For example, confirming bank balances with banks, confirming receivables with customers, or confirming payables with suppliers. As a result, external confirmations provide high quality and reliable evidence. Now you may ask, why are confirmations so important? The answer is simple. Since the evidence comes from independent external sources, it is generally more reliable than internal evidence. Furthermore, confirmations reduce the risk of management biasness or fraud or errors in accounting records. Therefore, they are widely used in auditing, especially for high-risk areas. At this point, it is important to understand the two main types of confirmations: positive confirmations and negative confirmations. First, positive confirmations. It requires the respondent to reply in all cases, whether they agree or disagree with the information. For example, a debtor is asked to confirm a balance of any amount. They must respond. Therefore, positive confirmations provide strong audit evidence. On the other hand, negative confirmations require a response only if the recipient disagrees. In other words, if no response is received, the auditor assumes the balance is correct. However, this approach is less reliable because the recipient may ignore the request or the response may not reflect actual agreement. Therefore, negative confirmations are used only in low-risk situations. When auditors should use external confirmations? External confirmations are particularly useful when there is a high risk of material misstatement, or internal controls are weak, or even evidence from internal sources is not reliable. For example, confirmations are commonly used for bank balances, trade receivables, or loans and borrowings. Now, this is very important exam point. The auditor must maintain control over the entire confirmation process. This includes selecting the items to be confirmed, designing the confirmation request, sending the request directly to the third party, and receiving responses directly. Importantly, management must not control this process. Otherwise, the reliability of evidence may be compromised. However, sometimes management may refuse to allow the auditor to send confirmations. In such cases, the auditor must first inquire about the reasons for refusal, then evaluate whether the reason is valid. If the refusal is unreasonable, this may indicate possible fraud or management biasness. Consequently, the auditor must perform alternative audit procedures. If sufficient evidence still cannot be obtained, the auditor may need to modify the audit opinion under ISA 705. Another practical issue is non-response. In many cases, third parties do not reply to confirmation requests. So, what should the auditor do? First, the auditor should send follow-up requests. If no response is received, the auditor must follow alternative procedures such as examining subsequent cash receipts, reviewing invoices and contracts, and also checking supporting documents. Therefore, lack of response does not mean the auditor can ignore the issue. Now, even when responses are received, the auditor must evaluate their reliability. For example, the auditor should consider whether the response is authentic, whether it came from correct source, whether there are any signs of fraud or alteration. In today's digital environment, electronic confirmations must be carefully verified. Sometimes confirmation responses may show differences or discrepancies. These are called exceptions. For example, customer confirms a different balance, bank reports a different amount. In such cases, the auditor must investigate the reason. Possible cause includes like timing differences or errors or even frauds. Therefore, exceptions require careful analysis. To summarize, ISA 505 deals with obtaining audit evidence through external confirmations. First, confirmations provide reliable evidence from independent sources. Next, auditors must control the entire confirmation process. Furthermore, positive confirmations are more reliable than negative confirmations. In addition, non-responses and exceptions must be properly investigated. Finally, if sufficient evidence cannot be obtained, the auditor may need to modify the audit opinion. In conclusion, external confirmations are one of the strongest forms of audit evidence, and they play a crucial role in ensuring the reliability of financial statements. That's all for today. Allah Hafiz.